We'll start with the past picks here. March 6th of last year, nearly a year ago, David recommended to AltaGas, Williams Company, and Microsoft. Now, you're out of Williams and Microsoft. You're going to talk about AltaGas in just a second. So let's focus here on Williams Company, because that really plays into the theme, one of your themes, which is energy infrastructure. And you did pretty well on Williams?
Yes. So we've had a lot of companies in this space. We talked about Williams a year ago because one of the difficulties in buying U.S. midstream energy companies is that most of them are in master limited partnerships, which poses a tax difficulty for a lot of investors. The filings can be onerous. Williams is a corporation. You don't have the same problems, and it gives you an ability to invest in this industry, and it's a big company in owning a corporation. So, you know, it's a $25 billion market cap with just about a 4% yield. So it's one that certainly I'd be happy to own. We own some more smaller companies at this point that we think are maybe going to grow a little bit quicker.
So when did you sell Williams, roughly? Do you remember?
We would have come out of it in the spring of last year at some point. But, you know, frankly, I'm unhappy that we did sell it along the way. But we have lots of investments in the industry.
Okay, David, those of your past picks. Let's get to your top picks now.
Picks is brought to you by Quest Ready, where you can trade stocks for $4.95.
The aforementioned AltaGas is a top pick today. How come?
This has been a big holding of ours for a very long time. AltaGas is really a diversified midstream energy company, both in regulated and non-regulated businesses. It pays us a very nice yield, which is a little over 4%. It's a company that is growing its cash flow through building new projects. So they're building 3 big hydro projects in BC. What's interesting about those projects is that they have 60-year contracts with BC Hydro, with an inflation adjustment clause that means that as inflation goes up, their cash flow goes up. This makes it a very attractive asset. They also have a deal with a Japanese company on setting up LNG facilities and liquefied petroleum on the West Coast. So we think that we're going to get stable cash flow growth, probably in the near term, modest distribution or dividend growth, but it will accelerate over the next 5 years. And that's something I think the market's looking for.
Another top pick is Cineplex, with some record numbers the other day with their earnings. Tell us about this one.
So we really like the media space, steady cash flow. They're growing it very nicely. Their revenues grew about 23%. You're picking up a 4% yield. They're growing both their box office and their concessions. There's a ton of big movies coming to the front. They're building VIP theaters that increase their margins. You're going to get, again, dividend plus dividend growth, which is very attractive against a really low interest rate environment.
And wrap it up here with JP Morgan Chase. How much of this is a housing play? How much of this is just financials getting better?
Look, you have to find those that can take market share. JP Morgan is about 1 year away from completely rebuilding its balance sheet and meeting Basel requirements. They're taking mortgage market share. They are holding up their net interest margins, and going through this March, they are likely going to get the go-ahead to buy back more shares and raise their dividends, so there could be a step function growth in dividend yields going forward.
All right, we'll watch that one. JP Morgan, Cineplex, and AltaGas. Those are your top picks tonight. Always great to see you, sir.
Thank you very much for having me, Mark.
Okay, and I know our viewers like seeing you as well. David Burrows, our thanks to him. Thanks to you for all your contributions to the show, as usual, and always consult with a qualified financial advisor if you're doing any investing. Stay tuned for more great programming on BNN. I'll catch you later on The Close. Take care.